This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending November 6, 2021. Our question this week is, what are market makers? The answer will be provided later in the video. This week the market ended higher. The Dow Jones Industrial Average increased 0.56% on Friday and was up 1.42% for the week. The S&P 500 increased 0.37% on Friday and was up 2.0% for the week. The Nasdaq increased 0.2% on Friday and was up 3.05% for the week. Looking at the week, we can see that there were 14 up finishes versus one down finish for the major indexes. On Monday, Tuesday, Wednesday, and Friday, all the major indexes finished up. On Thursday, the Dow Jones Industrial Average finished down, while the S&P 500 and the Nasdaq finished up. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq all hit and closed at all-time highs on Friday. The new unemployment claims were 269,000 versus 275,000 expected. U.S. companies added 571,000 jobs in October. Long-term unemployment fell by 357,000. The U.S. 10-year Treasury yield fell. Mortgage rates decreased slightly. And the Fed announced that they would start tapering bond purchases later this month. New unemployment claims, the number of jobs added by U.S. companies, long-term unemployment changes, the drop in the 10-year U.S. Treasury yield, mortgage rates, and the Fed's plan to start tapering are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now, we are at our question of the week. What are market makers? A market maker is a firm or individual who actively quotes two-sided markets in a particular security, that is stock, providing bids and offers known as asks, along with the market size of each. Market makers provide liquidity and depth to markets and profit from the difference in the bid-ask spread. They may also make trades for their own accounts, which are known as principal trades. Market makers basically ensure that there are always buyers of stocks. Thus, you can always sell your stocks into the stock market. Unlike real estate or other items you may want to sell, you may have a hard time trying to find a buyer for your real estate, but you will find buyers for your stocks. Brokerage houses are the most common types of market makers. They provide purchase and sell solutions for investors. Because a stock's value may decline between its purchase and sell to another buyer, market makers are compensated for the risk of holding stocks. Now that you know that there are always buyers of stocks, does it motivate you to invest in the stock market? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should invest. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list from the week ending November 6, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Riot Blockchain. Ticker symbol RIOT. It's in the first column. It increased 15.69% for the week, but it was down minus 3.76% on Friday. Riot Blockchain is a U.S. cryptocurrency mining company. It primarily focuses on Bitcoin mining. It has at least 7,043 miners. The company has several subsidiaries, and through its subsidiaries, Riot Blockchain also seeks to develop a blockchain-based escrow service for wholesale telecom carriers. Riot Blockchain holds a 13% share of a digital exchange company in Canada, and it holds investments in a company that provides cryptocurrency accounting and audit technology services. Looking at a summary of results, you can see that Riot has increased 85.34% year to date. I have a trade on Riot this week. The trade is up substantially. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio is not outperforming the S&P 500 index ETF SPY. The Southside Portfolio is up 16.25% versus 25.32% up for SPY, a difference of 9.07%. The Southside is losing to SPY by just over 9%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin took a big hit earlier this year. However, Bitcoin has mostly been outperforming the market for the past month or so. Will the comeback continue? We'll see. The portfolio is 76.55% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 9.06% of the portfolio. Cash is 14.39%. The cash flow generated for this week was 0.61% of the portfolio account value. The account value changed by 0.41%. Meanwhile, the S&P 500 ETF SPY changed by 2.02%. I sold option contracts on 3 positions this week 2 calls, and 1 put. That ranged from $175.01 to $352.40. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week listed in the description section. And please like, share, and subscribe.